The following is presented by the U. Croy accounting firm. Nobody counts better than us. Hello, newly graduated CPAs. Welcome to the exciting world of audit. This presentation will be a brief review going over a few important aspects of the initial planning phase of the audit. To do so, we'll be looking over the absolutely amazing job our top team did in their last engagement with our client, 10 Peaks Coffee Company. Without further ado, let's jump right in. It is very important that you have a concrete understanding about the business and overall industry that you are working in. Context cannot be overlooked. 10 Peaks is a leading specialty coffee company that operates through two wholly owned subsidiaries, Swiss Water Decaffeinated Coffee Company Inc. and C4 Supply Chain Solutions Inc. The company prides themselves for their green extraction, staying chemical free, and using only premium grade coffee beans. Today we will be going over three main topics: materiality, risk of material misstatement, and revenue recognition. It is very important to use relevant information in order to set the right criteria to determine materiality. As you should recall from your amazingly taught university audit classes, the first step is to determine the benchmark, starting with the relevant users and their reliance on the financial statements. For 10 Peaks, this includes, but isn't limited to, current and future shareholders concerned about potential dividends, employees who have share-based compensation plans, the subsidiaries who heavily rely on the financial success of the parent, and management whose performance is being judged and they also receive bonus benefits. Overall, the team determined that the users are largely concerned with net income and would be sensitive to error. Therefore, planning materiality has been set to 5% of the company's pre-tax net income. Through rigorous hard work, the team concluded that 10 Peaks had very strong internal controls. As a result, it was determined there is low audit risk, allowing performance materiality to be set at 85%. Now, we will be discussing risk of material misstatement. Depending on the industry and the nature of the business, not all companies will have the same desired outcomes when creating their financial statements. The following are the high-risk accounts and assertions the audit team determined would apply specifically to 10 Peaks. Cash and short-term investments. It is the company's main resource for financing the construction of the new building as stated in the MD&A. Most important assertions at risk here are existence and accuracy. Inventory. The company has 5 components to inventory, including raw materials, finished goods, carbon, packaging, and hedge accounting. The account involves several judgments and adjustments relating to the cost and net realizable value. Assertions at risk are valuation and allocation. Revenue cycle. Most frauds occur in the revenue cycle, including misstatement of revenue, accounts receivable, and cash. Several estimates are involving regarding allowance for sales and returns for doubtful accounts. Assertions at risk are valuation, existence, accuracy, and cutoff. Accounts payable. A great number of fraudulent activities go on in this account, as companies need to look healthy to prosper. Finally, we will be reviewing any specific concerns our amazing audit team found when dealing with the revenue recognition for 10 Peaks. The two main accounts dealing with revenue are sales and accounts receivable. Auditors must always ensure that companies aren't reporting to be more profitable than they actually are. For example, it is important to check the existence for all amounts on the accounts receivable account, which has actually grown by 40.8% over the last year for 10 Peaks. The company has many incentives tied with net income, which may lead to situations such as intentional misstatements or not correctly aging unpaid customer balances. As professionals, we cannot just stop there. The team understood that 10 Peaks had many sales to customers outside of Canada. Do you know what that means? There is a greater inherent risk when it comes to the assertion of accuracy, as they will be dealing with constant changes in exchange rates. Once determining which accounts have high inherent risk and their associated assertions, the team must assess the controls that are in place to reduce the said risk and gather the appropriate amount of evidence based on their findings. This will conclude today's review. Remember, young CPAs, always be prepared, always ask questions, and always be professionals. Thank you.